Michael, welcome to Single Malt, and you're looking very well and dapper, may I say?
Thank
Yes,
you.
welcome, Michael.
Thank you. Pleasure being here.
Right. So, what we want to do today, Mike, is to consider how councils can monetize and fund and support, and in fact grow, so that they're actually getting a return from some of their discretionary services that are key within the local community. At the moment, they're kind of faced with either fund it or flog it, and sort of, well, do we need to keep this discretionary service going at all, or do we stop it or cease it, or is it another way of in the community supporting it so that we're not borrowing money to keep it going? So that's kind of the thinking behind today's discussion.
Andrew, you're on mute.
Do you want to introduce Mike to our audience first so that they know who he is and what he's about?
Well, that's what I was about to do, but yes, I will.
All right.
Okay. So the reason Mike is here, having given the problem, is that, well, tell you what, Michael, why don't you tell us a little bit about your profile in the financial sector, in the private sector?
Okay, great. So I'm Mike Kessler. I founded a company called Tokenize back in 2018. So coming up for 5 years now. And we are in the financial services sector, but we're trying to disrupt the financial services sector. We think that the existing status quo of how people do things, particularly on traditional stock exchanges, is not necessarily in keeping with the modern times and the requirements of both industry and investors. So my background is originally from investment banking. I used to trade equities at ING. I then ran e-business for the bank and then joined other various banks. I then went into the private sector, ran recruitment businesses. I've run and still continue to run a private hire rental business that rents cars out to the Uber industry, or not the Uber industry, the PCO industry. And additionally, I've then went back into hedge funds, and then I set up my own company that oversaw people who wanted to be in the regulated investment space back in 2012. And what we did is we set up an entity that oversaw people who didn't necessarily want to go straight to the FCA to get direct permissions. So we lent them our permissions and enabled them to trade off our permissions, and we oversaw their activities. And a number of those companies were in what's called the crowdfunding space, which was equity crowdfunding, where people are raising equity capital from investors and then into private companies. And we had the idea back in 2015 that it would be great if there's the capability to turn those investments into a tradable instrument. So one of our clients at the time was the Swiss Stock Exchange, and we approached them and said, we've heard of this new technology called blockchain technology, which will help with the way that these things are traded and settled so that you could do things in a more real-time basis and you could get rid of some of the intermediaries. And we'd like to turn some of these private investments into tradable, more public investments. So the Swiss Stock Exchange really liked the concept, but it was too much of a micro play for them. So we then started doing some work with the Gibraltar Stock Exchange, and which is a lot smaller exchange, but unfortunately they don't have a fully fledged secondary market where you can trade them. So it'd be very similar to crowdfunding, where you can list it, but you can't actually trade the instrument. So we kind of then decided to put our money where our mouth is and actually set up our own venture. So we did a bit of an analysis into the marketplace, and we decided actually to set up our venture in the Caribbean, in Barbados in particular, which has a good and robust regulatory environment, and also it's open to innovation and fintech. So we explained to the authorities in Barbados that what Cayman has done for the funds industry, we could potentially do for tokenized securities. And I'm sure later on I can discuss some of what those kind of tokenized securities are and what different asset classes are. But save us to say, we now have a stock exchange license, a brokerage license, and what's called a central securities depository license, all under one roof. And we also have capabilities in the UK as well, where we're FCA regulated, and we are looking at other jurisdictions around the world to also get regulated.
And in that context, Mike, what you're doing is allowing an owner of an asset, either a physical asset, a rights asset, or perhaps even an asset that generates revenues that can be securitized. What you're doing, from what I can understand, is generating a marketplace that investors could take part in, part ownership of that particular asset, and then if they wish to divest themselves of that part ownership, then there's the facility enabling them to do so. So for example, turning that into the local authority sector, what we could imagine is perhaps these assets that are owned and are part of the fabric of the local economy to be supported by community and other private investment, rather than to borrow money to sustain them. Is that kind of, am I translating that right?
So you can do it either with existing assets, or you could potentially fund new ventures. So if the community decided they need a new leisure centre for the benefit of the community, you could potentially raise that from the community and they could own it, or they could own, say, potentially the income rights to it. They don't necessarily need to own the equity. They could own the income rights, which is the revenue, so a contract for future revenue, or they could own part of the asset so that they could get capital appreciation on the asset, or a hybrid of them. They could own shares. We can do kind of traditional shares as well, but I think there's more interesting asset classes in this day and age.
And therefore, the council is now effectively self-funding the discretionary service that means a lot and generates benefit to the local community. And it's not necessarily having to sell that asset in order to raise that money, or borrow money to keep that alive. Does that sound something that some councils might be interested in? Andrew?
Well, I think if...
Sorry. You're muted again.
I think there's a lot of tension about maintaining services to communities who have enjoyed discretionary services, the pools, the museums, and statutory services. It's essential that they keep going, but of course the funding of local government doesn't match the requirement to staff and to the recent energy costs. A case in point, I think there's a LGA publication this week, Local Government Association publication, saying many local authority leisure centres, pools mainly, which is where the cost is to heat, will go out, will stop. Your analogy at the beginning, stop or fund. And they're in the devil in the deep blue sea situation. So I think they will be forced to look at these sort of options that Mike's outlining. They won't know the first thing about what, possibly with respect what you're talking about, because it's not the lingua franca of the local government scene. But over the last 20 years, most CFOs have got used to talking about where some councils have, I think local government's got, over £2 or £3 billion worth of reserves, but these are usually destined for something that's coming down the track. and some rainy day reserves there, which of course we're all using up very rapidly because, you know, most councils always need more to keep going. But those targeted reserves for, you know, new, you know, bits of road or things that are coming down the track, CFOs have been used to placing that investment with agents, or sometimes they self-invest for yield, but also getting used to how the Public Works Loan Board works and the sort of government getting a bit nervous about if they're investing for yield. That now you have to sort of invest for stability rather than for making money. But then that's the point. We need to make money to put it back in the business. So I think increasingly chief execs, boards, members will have to get used to what Mike is introducing us to, is a whole different world of interplay of different agencies, platforms, and also creating products that are new to the community. I mean, it seems really exciting to me. If I was sort of just a normal, you know, everyday person in my community, that I could possibly invest in something I always cherished, a museum or a leisure centre or a harbour, and feel that even if I've only got a modest amount of money, that I feel that it's going to the right place and I could perhaps get my money back with a bit of margin. And I feel I'm sort of circulating my resources into something that's my own community. So I think that, to me, not understanding all the technical sides, seems to be the real big business case here, is that it's the local community coming together to support the local economy and the things they want to do with their assets, but also creating something of value to them individually. So it's not something, it's not like raising the church roof back in the day where they all by subscription and they just did it because they love God, or the British Museum where you bought I think a panel in the new over the cafe, they kind of these hexagon roof you could buy for 100 quid and gift that to your partner and say, oh, that's your window pane, you know, 30 meters above you. That was more like largesse or gifting. This Mike is sort of telling us about a marketplace here, which I think will be of interest because there's precious few other options. You don't want to close a leisure centre, even though, to be honest, people don't pay enough in the kind of cost per swim to keep the thing going. So it's sort of seen as a public good, but it's a commercial entity. Equally, you don't want to close it because that gives you grief from the community about where are we going to learn to swim, etc. So there's a big moral dilemma here, for which I think this third way would have to be explored, because we want our cake and eat it. We want more cakeism in local government. We want to keep the things we love, and we want to find a magic way of doing it. And the current instruments of borrowing or taxing or just asking the government for money, because that's taxation anyway, isn't working and hasn't worked for a long time. But a lot of the local government scene hasn't woken up to the fact that it's all gone. And they're still scrabbling around saying, well, when things get better, we get the money from government. And you say, well, it's not going to. What forecast have you seen, given the IMF yesterday? Do you see where the government says, oh, yeah, there's 30 billion for you? You know, so we've got to find our own solutions locally or collectively as an industry. That's a long-winded way of saying, yes, please, Mike. What next? How does it work? They'll say, well, how does it work? You know, because they're very cautious.
So I think one of the major things that you've mentioned there is about borrowing. And I think if you look at borrowing, then over time you pay interest on a loan, and at the end of that loan, you pay the capital back. And I think one of the products that we've developed, and I'm not saying it doesn't need some finessing, because depending on which jurisdiction it's in, there's certain activities that you need to undertake in order to make sure it's compliant with the regulations. But I think our contract for future revenue is far more interesting. Because what it does is enable someone to take a percentage of the income that asset generates. So take your leisure centre for example's sake. I'm not saying, as you said, that everyone pays the right price for a swim, but they are paying for a swim and it's generating a certain amount of revenue. If you can pre-fund that and people are putting in, let's just say it's 5 million to run that, and the cost of running that leisure centre for the next 10 years incidentally works out to be 5 million. I'm just using example's sake here. Mm-hmm. And then what you can do is on a perpetual basis, so you could have it time barred, or you could say in perpetuity that X percentage of our revenues, let's call it 30% of our revenues, because you've covered your costs for the next 10 years, we are going to give back to the people who have bought into that right to receive the income. So not only are they funding their local environment and funding the leisure centre so they can get use of it, but I think they also become proud of the fact that they're doing something for their community. Hopefully they can get use of it themselves, and also they become a bit of an ambassador, and hopefully they generate some income. So if you have a decent return on the capital that they've deployed, but the beauty about something like this is it doesn't have a redemption. So they get paid the revenue that is generated, and there is no redemption right at the end of it because the capital doesn't have to be repaid. The biggest difficulty that I understand in a lot of local council funding is they will take a 10-year loan or 7-year loan, whatever that ends up being, and at the end of it, they're obliged to repay the loan. And therefore, typically, and this is what the government does, and hence why we've got over 2 trillion worth of borrowing, is they will refinance it because they don't have the capital available to repay the loan. If you don't have to repay the loan, then this has to be surely a better way of doing business, so that actually you don't need to necessarily think about how you're going to find the money. All you need to concentrate is how you can maximize on that resource.
Very interesting. I think that would be far more palatable generally as a concept about, you know, the redemption, or, you know, the big anchor at the end of this, you know, lovely picture, and then suddenly you have to pay back a bit like mortgages, and I think it animates, I think, the local. It is a business proposition for local people, but it's also, as you say, investing in your area, which I think people are invested in, you know, hopefully the place they live in and, you know, work in and grow their families. And I think it's a very interesting thing, isn't it, David, that it's an area that hasn't been explored yet. And I think hopefully we can get that explored.
And I think as we were talking then, you, as well as the sort of social worthy cause motivation, a lot of the sort of things that you reference with that view, Mike, is that, you know, that it also benefits them doubly because perhaps they're a local small business, and they perhaps rely on the visitor economy, and therefore they get kind of 2 bites of the cherry, as it were. So they get they get 3 bites. They get a sense of community, as that you referred to, and, you know, worthy enterprise. It's a service that is valued, and also you can hopefully generate a dividend or some sort of return from your investment. And the third thing, of course, is that by sustaining these local services, your small business actually benefits. So if you're investing in a stadium, sports centre, a regular event, I mean, I know many councils now sponsor a food festival, which generates visitors into the area, and local businesses benefit. But obviously, there's a cost to organising and hosting that venture. Another one is that they sit on open spaces, and the council has to sustain that open space for the event to take place on. I remember, for instance, Andrew and I went to Silverstone, and besides a nice day out on the track, we were looking at how we could actually help the organisation and the local authority that is involved in supporting that. How can we generate a return from the revenues for that sort of support? So the local community has an interest because hotels fill up and what have you, but also a wider a wider audience might be, driven to supporting a sport that they love to pieces.
Absolutely, absolutely. And I think I forgot to mention that the whole point about this being on a stock exchange is those instruments would be tradable in a secondary market. So if someone bought into it, it went up in value, went down in value. We can't obviously dictate the price of it. That's dictated by the marketplace itself. But it also gives people an out. So if someone wanted to invest a small amount of money, a couple of £100 into something, and they felt that it gave them that sense of community, and they decided that it wasn't providing enough revenue to them, or they needed their money for other purposes, I'm not saying 100% that they would get the £200 back. They may get more, they may get less, because that's the nature of a marketplace. But because it's traded on a market, there should be someone, hopefully a willing buyer, in order to buy that asset off them, or that future revenue. So I think it's an added incentive to have liquidity into something that is typically illiquid.
Yes, I see.
And the other thing is, with the council still retaining the majority ownership, perhaps, of the asset, there's nothing to stop the local council picking up those sort of traded in, and that's not the right terminology, but if people want to take the gain that they've got so far on, they need it for other purposes, as you say, then the council might actually want to step in and take advantage of that opportunity to either keep the price more stable, but also to bring back greater control of the asset, which then they can release again. So I think it's a very dynamic situation that you are painting, Mike, and something that, particularly with things like the visitor economy and events and that sort of thing, but it can also apply to good things, such as, for example, in the care sector at the moment, there's a huge issue that local authorities are not providing sufficient care because there's not enough facilities being built or extended or what have you. But they would benefit by supporting that sector, because the local community needs it. It's a discretionary service in many cases, and therefore there's that sort of triple bite thing. The community benefits from investment in terms of the service quality itself, but also they benefit from the financial side as well. And when we see the NHS dipping into that marketplace and chucking 200 million to buy fractional ownership, so it's a sort of semi-fractional ownership, but they're buying 200 million pounds worth of beds so that they can clear people out of hospitals and not become a care hotel. So I think this whole dimension of private and public sector working in harmony to the benefit of a local economy, I think it needs that type of exploration, that type of open-minded thinking, without necessarily extending the borrowing or asking the government for handouts.
I agree. I think there's several factors that can be considered. I think councils sit on assets, or they want to develop assets for their community. And I think the problem is a lot of those assets are underutilized or badly utilized. I'm calling a spade a spade.
Well, after COVID, a lot of headquarter offices are being sold off because they don't expect all of their staff back. I mean, they will get some back, but they'll have whole terraces of floors that won't be occupied again, and they can't sell them to another public sector because they're also not coming back to work either in that way.
Yeah.
Or the private sector that says, well, what do I do with it? I need to knock it down and build some houses. Those will sell, but not the original. As you say, they're badly utilized because the original purpose is gone.
Yeah, and I think, as we've discussed previously, I think councils whether they make investments into products or projects, they are best there to serve the community at what they know how to do best. And I think we understand the world of finance, and I think we understand it quite well as to how to do things. And that's what we stick to. We stick to our own kind of genre. And I think sometimes with councils that have gone outside their existing remit and done things that has not necessarily been to their advantage in the end, I think this gives the ability for the public and private sector, like David was saying, to come together and actually work out what to do best, how to best get performance out of an asset. Because typically, private sector runs more efficiently, I would say, than public sector. I'm
Depends
not
what
sure
you're doing.
it depends what we're doing, of course.
If it's widgets, I would probably say yes, but if it's complex things, I'm not always sure.
No, I agree. When it comes to, and obviously there's some things that the private sector shouldn't get involved in, which is where I think that there is this conflating ideas and ideologies that we should explore as to how to make this work better for communities, for councils, and also for the private sector.
Mike, can I ask a question on that? In the private sector, where you have investors, you mentioned you creating sort of a platform for people to trade their investments. Do those investors take get very involved with how the businesses they're investing in or the assets are being run? Because I'm trying to make an analogy in this sort of community ownership. Would the local investors, the people in the area, would that make them more interested in coming to the council meetings and hearing how the council's running their business because they're invested in it? Or do they go, well, I'm going to get my money back anyway, so it must be okay?
I think it's an interesting question, and obviously in terms of the way it's structured, that can be done however the instrument is made. So if people have voting rights, they may have limited voting rights, they may have full voting rights, or they may have no voting rights. I think it's useful to give people a say in their investments, but I also think it's sometimes useful to limit that say, because someone who might have some money into doing something, put into something, doesn't necessarily know how it's best run. So I would say you don't want it to hamper the business, you want it to support the business, and therefore having limited say over certain activities. For example, let's say the leisure centre. If they suddenly think, you know what, paddle tennis is the next big thing, and therefore if we built 4 paddle tennis courts, would that help generate more revenue? And therefore, is that something that we should be putting our resources into, and asking the community of investors if that's something that they are behind, and giving them some of the credentials as to why they think this. I think something like that is great because it involves the community, and therefore they can feel that they're part of that decision-making process. Whereas if you're putting a paddle tennis court in a leisure centre where, let's just say, no one's going to use it, it might be providing a facility, but a facility that's not going to generate the revenue, it's a pointless exercise. So I think involving that community of investors is actually a perfect way of getting a kind of doing the market research to say, is this a worthy investment?
Yeah, interesting. I'm quite interested in the democratization of that investor base, because you're creating an opportunity for people to perhaps put their hard-earned pennies and get something back, and the local authority to keep that discretionary service going. But it also allows them beyond 100 years of history, where the council just said, right, they did consultation, but here is your new leisure centre, and we've fitted it out like this because we think that's what spin biking, everything, that's what you'll want. And to some extent there is a sort of consultation, but that's basically the council doing what it wants to do, as would a private sector firm saying we're into making Teslas and that's what we do, so invest or not. If they suddenly said, well, we're going to go into the kind of health spa business, if Tesla said that, then the investors might say, hang on. And I think this is an opportunity for the local community and the businesses in it to see the council in more transparently, to actually say, well, what are you doing to support us? And for the councils and the people that get elected to them and get to manage them to be much more in tune with the investability of their council by the investors, but also the community that are hoping that the council's successful. And often councils can be criticised for being a bit aloof and a bit remote because they have to make decisions for everyone, not Mike and David. You know, it's sometimes it's tough love, but equally we often complain that only 4 people come to see our council meetings. You know, and I know in the private sector you wouldn't expect people to turn up to board meetings, but there are annual meetings which investors can come to, I imagine, that hear what the leadership is doing for the business. And I think this is wholly good to be more inside out. I mean, the Thurrocks of this world, the Croydons of the world probably weren't that transparent internally to their own people. Even the chief execs and the auditors probably didn't know what was going or should have done. But I do think it's an opportunity. This model does give a kind of inbuilt sort of a democratization. I know it's not fully like that because they're tradable and it's commercial, but it feels.
But I think that is democratized.
Yeah.
I think it gives them the ability to actually own something. It might be owning a revenue stream rather than the actual physical building. So, but it does democratize access to finance. I think your example of Tesla is perfect, because Tesla, or Elon Musk, when he was focusing on Tesla, he was doing brilliantly. He then had his focus taken away and started focusing on Twitter, and you see the slump in the price of Tesla. So I think that's a brilliant example to show, in the commercial world, you take your eye off the ball and people penalise you for it. In the world of local authorities, you might be penalised by the people because they don't have a good view, but this could actually ascribe a value to what people are thinking. If that asset is not being correctly run, then people would vote with the fact that they would want to sell that asset. And I think people can see, therefore, that you want to be in a position that people are building up their asset base rather than trying to diminish their asset base.
On that note, Mike, and coming back to, well, I'm conscious of burning up a lot of your time, so maybe we can sort of round up on this sort of the other direction. I many years ago established I didn't do it all by myself, but I helped a local authority establish a business community. And as Andrew was saying a second ago, many are finding that the big corporate head offices of these councils all of them are not required. But in the case of this particular council, what they did is use part of their offices to set up a business hub, and they now have, I think it's about 200 companies that regard that as kind of a home base where they can park themselves, where they can get other services from the authority that otherwise they would have to pay more for, because the council can aggregate the purchase of those services. And the other thing that they are doing is they've now totally rebuilt, because of the success of that, they totally rebuilt the council offices, and now they've got business communities in there as well. Consumer communities in there as well. So they've got a pharmacy now and a health centre within that building. So as well as going to the library at that centre, they've got a restaurant that is privately run, that people can buy nutritious food and have a sit down and have a coffee. They can browse the library. They've got pharmacies. They're trying to get a GP practice in there. So all of a sudden, what used to be the council town hall type of thing is now turning into the local authority orchestration of services. And obviously it doesn't have to be within the same building, but that's what they've done. And it's all being financed through the local community participation in the building, all of the refurbishment, all of the new construction and so on. It looks wonderful. But is there a case then, Mike, for the local authority saying, well, we've got businesses that we feel are viable, and maybe the local authority becomes, and I'm not saying a hedge fund, but maybe it becomes an investment oversight with private sector experience, making certain they don't sort of just piss it all away. Sorry for the analogy. But do you see what I mean? It's kind of a going back out into the community. So the local community is raising money that is then invested in local businesses, overseen by somebody that is proficient in that type of oversight. And all of a sudden, you've got use of assets, you've got local communities, you've got local businesses thriving, and so it kind of generates a circular economy. Is that crazy?
No, I think it's a really interesting idea, because effectively they're helping incubate these businesses. So I would say that if they're able to provide services at a discounted price, they're still presumably charging some form of rent to these enterprises that are in the business. So again, they could say, in return for what we're providing you, we give you reduced rent, we give you access to all these facilities, etc., etc. But we want to take a slice of the equity or revenues or whatever it ends up being, and we will put you on a pathway that if you're successful, so you've incubator friends and family stage or whatever, then you go potentially say to crowdfunding, and then if that continues to be successful, then they can be introduced, say, to us, and we could help list them on a stock exchange. So we can kind of take them from cradle, I wouldn't say to the grave, because hopefully there is no grave. Hopefully it's an ongoing kind of gravy train. And I think the interesting thing is here that it could be a case that, I mean, one of the things that we're going to be doing in terms of our fee base, we're not charging huge fees in terms of what we're doing, and we're trying to template the whole process to make it a lot easier. But we will be taking some of our fees in the form of the actual securities, the tokenized securities themselves. So we're also vested in the success of the underlying project. So if that does well, we do well. And we're also in the process, I can't give too much information away, but I think it's safe to say that I can, in very broad terms, we're about to merge with a social network. It's only a small social network, but we recognize the value in creating communities around financial products. And what we want to develop is more around social finance and how people can feel that they are part of that mechanism, that I'm not saying necessarily they have an influence, but it does talk about democratization. It does talk about having access to things that typically people never had access to before. So whether it's in the fan-based economy, whether it's in the sports world, whether it's in local councils, I think giving people access to things, people watch Dragon's Den, people watch The Apprentice, people think, God, I wish I could put a couple of £100 into that product because I think it's a really good idea, or I totally avoid it like the plague. But I think if there are those mechanisms in place, I think councils should support local business. So,
and I think the key thing there, Mike, is to determine the profile of the business that is supported. So perhaps what you want to do is the council provide as you say, an incubator for startups, which generates money, but for established businesses, in other words, it's not a bet the farm type of thing that Andrew is talking about, but for established businesses, they get access to this financial capability that you're talking about, So you're not asking local people to invest in risk. What you're doing is asking local people to invest in scale and acceleration of an existing business, and then that actually attracts entrepreneurs who are startups to pay some money into that type of incubation capability, because Y Combinator and others actually get some money either in retainers or in equity to getting businesses off the ground. But established businesses can have access to that type of investment source to accelerate and scale their early success.
Of course,
Absolutely.
they're employers locally as well. So it's a triple, I think you had got up to 3 or 4 benefits, David earlier. If they're also that established business is going from, sapling to mighty oak, and it's employing people locally or even remotely, they're on the payroll. That's good for the local economy. They spend that money locally, as we know. Business rates, retention increases, council tax gets paid, everyone's a winner. Mike, just before you go, I feel David's sort of trying to help you get on with making more money somewhere, putting water in that pot plant. For our listeners who might be quite intrigued what tokenize means, just give us a brief overview of what a token is, because that's the intriguing bit in the kind of title. Is that a different thing? What is one?
So to be honest with you, it's a slight anomaly. So these are securities. So we're not involved in crypto. We don't touch crypto. I'm personally not a huge fan of crypto. I think we've seen enough damage that has been done throughout society with some of these things. So we are securities through and through. Our chairman used to be a director and head of markets at the London Stock Exchange, for example. We have a number of people with proper stock exchange and brokerage backgrounds. So that tokenize and tokens, effectively, we're providing a way of securitizing assets. So whether it's creating future revenue streams and securitizing that so that people can actually trade them, or royalties, or whether it's fractional ownership of actual physical assets or hybrids, or whether it's shares, or whether it's bonds, or whether it's funds. We can tokenize all of those assets, and effectively the token actually only exists right at the end of the process, in the settlement process. So the token,
where it crystallizes into something you take away, you mean?
Well, to be honest, you don't take it away. It stays in what's called our central securities depository, but it's really a record of the activity and a register of everyone who owns any of our assets.
That's the blockchain bit, is it? Where
Correct.
You've got an audit trail of that existing and trading.
Correct. So it's a fully immutable record. It can be obviously dissected by the regulator, by ourselves, and potentially by the issuing company. And it means that if a transaction has taken place, we know it's taken place. No one can deny it's taken place, because it's basically across a distributed ledger. So I think having that record that night, and it also, in terms of settlement, it means we only do things on what we call a delivery versus payment basis. So someone has to have the cash to buy the asset or security, or they have to have the security in order to sell it. We don't support what's called short selling. So we don't want people speculating on the price of an asset going down and borrowing it from other people in order to push the price down. We don't believe that that's, I'm not saying it's not a good market environment for shares and stuff, because it's worked over many, many years, but we don't think that if people want to buy assets, you could have a hedge fund like Wall Street or in Wall Street that should be able to push down those assets because they think it's overvalued. And so you saw that with GameStop. So the retail community came in and said, you know what, we're going to put two fingers up to Wall Street. We're going to buy this like crazy, whilst they're shorting into it. And therefore, Wall Street lost its shirt in terms of financially, because the retail community said, we don't want you pushing down an asset, because all you do is push down the asset value and then buy it back cheap. So we want it at the value that we think it's worth, rather than what Wall Street and some people are doing just to manipulate prices.
Fascinating stuff, really.
Mike, I feel that we have a Pandora's box in front of us, and therefore, and a new way of the local economy being funded by the local by local ownership, and actually attracting external ownership because of the initial success. So it's not sort of restricted to postcodes. You can be an investor anywhere in the world, but it's that magnet, that attractiveness of that type of thing that fuels its own growth almost. But what I'm thinking is, if and this is completely off the record, and well, it's not off the record, it's left field. It's on the record.
Yeah, really off the record.
Stick your fingers in your ears for this bit. But do you think there's merit? Because I think this needs to be more exposed and scrutinized and so on. If Andrew and I were hosting whether it's a webinar or an event, and we could get people to come along and cover our costs. I don't know about you, Andrew, but I think that
it's closer than Dubai.
This could
not as attractive, probably.
Well, we could make it attractive. Yeah, we could have it in, a nice coastal resort or something within the UK. Let's keep it in the UK family. But I'm just wondering, Andrew, what's your thoughts about, and to the people watching this podcast, maybe there's something that it's kind of almost radical and revolutionary that people would want to dig a little more.
Yes, I agree. I think people will say, well, I'm not really, I don't understand it all, but I need to be there to hear more. Because if this is the inception of something new in the new, third way or whatever, we want to be on it to understand it. Because as I said at the beginning, there really isn't that many palatable options. You don't want to divest yourself of important hard-won securities, if you like, or intellectual property. Equally, we're all running into the sand here. We can't keep going just by using reserves to keep the services going, because either council tax or national tax coming down as grant or local discretionary fees and charges is not enough to keep a normal council going. So you can't fail, but you can't succeed either. So we need the sort of new instruments to come out of that, mother of invention is necessity, isn't it? So I think people would come from our 180 group and wider, because, and perhaps our contacts at SIPFA and the public finance accountant sector should be looking at this, because they're going to be prodding and poking Mike and saying, oh wow, what about my original investment, and what if it goes wrong? Well, it's going wrong now within the kind of regulated local government sector. So we can't actually, it's not like saying we can't do it worse, but we've got some bad examples, some great examples, with Merton selling off a subsidiary for good return. That's great, and let's have more of that. But we need more options, and Mike's giving us this insight into something that is new and a bit curious, but let's explore that. And if Mike and his team are happy to offer a bit of that, I think we need that debate across the two sectors, private and public, but also within private. I'm sure within the private sector, Mike, you're still exploring that with people who've never heard of what you're doing as well.
Definitely. I think it's about community. I think these days you see social networks and stuff, it's all about community. And I think the more we embrace the new changes, Web3, whatever you want to call it, I think we need to look at these new alternatives, because either we watch them from afar and they pass us by, and you watch that train going past and it's a juggernaut, or a large train, And I think people have to realise that jump on the train whilst it's at the station is a lot easier than whilst it's moving at full pelt. And I think that is where we're going to head towards. Are we there yet? No, but I think we've got to put the building blocks in place in order to achieve the right outcomes. So more than happy to attend one of these.
Thank you very much.
Okay, that would be
you.
brilliant.
Thank you
And I think just to wrap up, I think getting our colleagues at SIPFA involved also gives comfort, and maybe maybe we can persuade SIPFA to be the host of the event. You know, well, they would kind of brand it, you know, as the
their idea.
Yeah, their idea or something like that, but that would give a lot of confidence and comfort to people who would then attend that, and we would open up a whole new world of economic financing in this environment. And on that note, Mike, thanks awfully for your time, and it's been crazy, and I think that we're onto something, but we just need to make certain that everybody understands it and then gets behind it.
Excellent. Thank you very much for your time.
Thank you very much, Mike.
Yeah, and we'll talk of this anon, Mike.
Absolutely. Take care.
All right.
All the best.
Thank you. Thank you.
Bye-bye.
Bye. Well, David, that was amazing, really. I mean, it's something that I've never come across in local government finance, and as you said at the end there, we have to prod it and poke it and see how it works, but we've got to find new ways, and this seems to have, you know, the starting point of in Mike's world. It's growing and gathering, and as he said, we want to be at the right station, either to choose to let it go out the station without us joining, but to acknowledge it and to understand it, because clearly just doing nothing, you know, you'll get the same result.
Yeah. And
Yeah.
I think what we've got here is the whole concept of single malt, which is to introduce our audience, and maybe we can start a single malt fan club as well. And the other
like
thing
and
that
subscribe, as they say.
Yeah, and the other thing I was thinking that we could actually ask people within the 180 group to think of topics that we could find expertise on, and to host these events, and make it more rather than our whim. For you know,
it's democratize the list of topics to talk about.
Exactly.
I'd be very surprised I'll be very concerned if the group on the 180, as we're growing, isn't going to say, let's find out a bit more about the these tradables and these new platforms. You know, we're very worried about it, so allay our fears, or I'd like a bit of that, please. And how would it work? We need some worked examples probably from that group. How would it work with an asset X, or as you say, an event Y, or a, you know, non-physical securitization? I'm going through a massive learning curve, and I need to go. You know, I need a short course. I'm sure you can do me one on literally what do these terms mean. I find it so easy to get into your own area of local government finance, and that takes a while to understand. But just to understand what hedge funds are, and what platforms are, and what secondary products mean, all these things are a bit scary, because I don't really understand what they mean. I'm nodding, but I think I know what they mean, but I need to have a more in-depth webinar or a boot camp or something to understand them.
And I think a good example of that, what you've just described there, is the reference to an incubator. What the hell's an incubator? You know, we know what, you know, how it helps, you know, chickens grow and all of that sort of thing. And to a certain extent, that's a good analogy. But I think that a local authority is well placed to orchestrate, you know, some of the incubation of either early stage companies and take them on to the next level, generating more and more employment and attracting more and more visitors and so on and so forth. So I think that a council is well placed to be a trusted incubator and involve expertise from the private sector within their oversight to actually make it a not only a success for the community, ipso facto the council, but also in terms of a sustainable service that doesn't need money to be borrowed again.
Well, you've said two very powerful words there, trusted. And we know from our research that whilst local people can say bloody council, they still feel it's trusted because at least you know you can vote for it, you can vote it out at the next election, you know where it is, and sustainable. I mean, we've got to sustain good public, we've got to provide public services because as we know how important they are, how we sustain them is the big question. So I think sustainable, trusted, and councils do a lot of this already, and they do the local plan to say where the housing and the employment's going to go. It's not just the buildings plan, it's how the community in the next 30 years will develop, how their areas. They do a lot of work with their economic partners on local enterprise partnerships and local more hyper local partnerships about the economy. So at strategy level, very good in most cases, very interested in bringing more investment to their local places. I don't know a corporate plan that doesn't say make anywhere share the best place to live, work and play and to bring investment and jobs. But I think the trick is to bring it down to, as you've described, something more practical at the incubation, the custodian, the bringing in the platforms for actual real business at the bottom end, be it literally occupying the offices in 200 businesses or virtually taking an interest, literally possibly even an investment in those local businesses and vice versa through investment in fractional ownership to get a more integrated route in the local economy where we're looking after our future business rate income by looking after the businesses that shouldn't go bust if they got a good proposition, helping companies not continue to fail to wind down gracefully, but also to create an ecosystem. I mean, Mike, it's the first time I've heard a purebred financier talking about social networks in the way he did. That's quite a shock, really, quite a pleasant shock to say these networks of people, the talking heads over teams that are getting together in a financial interest to share, even mergers. He talked about a merger. He says it's all about community, didn't he? And I think if councils know one thing, it is all about community.
Absolutely.
And I think what we're trying to do is connect that community at the bottom end, which has often been a bit polarized. So maybe these podcasts can help stimulate. And if the community listening to this now want to offer us some ideas to feature someone that they've got that's already doing this, please let us know. And like and subscribe as well.
Okay. On that note, very modern note, let's wrap this one up. And I think we've started something here. I think this has got enormous potential. We just need to exercise it thoroughly in that type of open discussion with more people than just you and I.
Yes, much as I love you to bits, David.
And I will see you again in the next podcast.
See you again. Best of luck. Cheers.